Hey guys! Welcome back to Stocks Around Us with me, Pizza. Guys, we've been traveling to Malaysia for quite a few times now, and you know what is one of the things that impresses me most about KL? It's the airport. I'll tell you why in a second. But first, do you remember those days where airports used to just be crowded places where people want to get in and out as quickly as possible? Not anymore. These days, there are some people who are willing to cut their trip short so that they can come to the airport earlier to shop. I'm obviously one of those people because duty-free alone is amazing, and now there are all these brands and things to see here. Right now, we've come to Malaysia's airport's newest addition. This is called KLIA2, which is an airport that accommodates low-cost airlines that fly in and out of Kuala Lumpur. But more importantly, this place is like a lifestyle shopping hub for tourists. So there's a huge shopping mall here. This is what I call a world-class gateway. Malaysia Airports Holdings Berhad manages and operates 39 airports in the country, 6 of which are international airports, 16 domestic, and 18 short takeoff and landing ports in Malaysia. They also manage airports in India and Turkey. Interestingly, they are the first airport operator in Asia and the 6th worldwide to be listed in a stock exchange. Currently, the company is serving more than 87 airlines and about 80 million passengers per year. Of course, the group's main business is in management, operation, maintenance, and development of airports. While there are many things involved in airport operations, the aeronautic service areas include things like passenger service, aircraft landing and parking, and additional services to airlines. Right now, there's a rising demand for air travel in Asia and an expansion of low-cost carriers into new markets, which will surely benefit Malaysia airports with more passengers and aircrafts. What the company aims to do is to facilitate commercial development around their airports as well, sort of like an airport city with retail, accommodation, and other attractions. As we can see from their airport, KLIA2, which is a destination within itself. This is why the group's other non-airport operations include business and commercial activities such as duty-free and retail operations, their Sama-Sama Hotel, commercial space rental operations, and parking facilities in the airports. The company even has an agriculture and horticulture business where they sell palm oil and other agricultural products. Clearly, Malaysia Airports has a very diversified airport portfolio in which no other airport company in the world matches. Guys, this is almost like a trap. You arrive in this country thinking, okay, I'm gonna do some sightseeing, but then you're greeted by all these exciting stores that lure you in. This becomes your first tourist destination. Now, before I go crazy on a shopping spree again, let's go and meet our special guest today. Ladies and gentlemen, Datuk Badli Sham, the Managing Director of Malaysia Airports. So first of all, could you tell us about the passenger traffic in Malaysia? For example, how much has the number of passengers flying in and out increased over the past year?
Well, in 2013 we had an exceptional year. Passenger traffic grew almost 20% to about almost 80 million passengers that went through our airport systems in Malaysia here.
What about this year?
Well, this year we are still on track. Our forecast is to end about a 7% growth over a very healthy 2013. But our year-to-date numbers are already at about 9% growth. So there's still strong traffic patterns into Asia and then specifically in Malaysia as well.
Are you finding that the weak global economy has affected this number?
Well, I think it has to do more with GDP growth in terms of the markets that our airlines serve. And as you know, in this part of the world, we're still growing significantly from a population and GDP as well as per capita income. So those things certainly help because our airlines fly predominantly into this part of the world and of course bring traffic outside of the region as well into this. So that's why we're still growing year to date in 2014 at a 9% clip.
Right. Are you finding more activity, travel activity within internationally or locally?
Both. Domestic travel is increasing. There's still some growth within Malaysia, but the growth is coming obviously outside of Malaysia into Malaysia and vice versa as well. So international traffic has certainly increased. Most of that, once again, has to do with what's available in this part of the world, in Asia itself.
So what is your outlook on the tourism in Malaysia in the near future?
Well, even with a lot of incidents that has happened, as everyone knows, in Malaysia, etc., tourism receipts has still gone up. I believe it's about up by 8% into Malaysia, and so as part of the growth in total traffic, it is also driven primarily by leisure passenger traffics into Asia.
I see. Now talking about your airports, you have so many airports within Malaysia itself. Right. Are these owned by the company or is it a concession deal between you and the government?
Right. So Malaysia Airports is running 39 domestic airports here in Malaysia, and it's a concession by the Malaysian government. So in essence, the government still owns those assets and asks Malaysia Airports to run it over a concession period.
So now you have many different airport activities. You have the airport and the non-airport activities. Could you give us a rough breakdown of the revenue from each specific activity?
Okay. Well, I think that's what makes Malaysia Airports a bit different from other airport operators around the world. As part of that concession agreement, taking on 39 airports, the government also asked us to actually manage other revenue streams, which is the non-aero portion. Yeah? And so from a revenue perspective, today it's almost about 50-50. 50% from the aero portion and the other 50% from the non-aero portion. But moving forward, over the next couple of years, we look forward to actually increasing the non-aero portion, again because of our uniqueness. 39 airports in Malaysia, 3 international, as well as a large land bank as well, to develop part of our vision in terms of creating an environment for an airport city that encourages people to actually come into the country and obviously spend into the country. And so, our role is not just in airport operations, but increasing that attractiveness of Malaysia by developing the non-aero portion as well.
So talking about this airport city, what are some of the things that you envision for these cities?
Well, as you come in, I hope you've seen that the development of a premium outlet has already started. And over the course of the years, other commercial development activities for the MICE industry is also being developed as well. And of course, there'll be other commercial and leisure entities that we develop around this airport system here to encourage both domestic as well as leisure and international passengers to come into Malaysia.
What would you say is the key strength of Malaysia airports?
Well, as I said, we're more than just airport operator per se. The uniqueness is that we are to develop the non-aero portion. The KLIA2 that you mentioned for low-cost carrier, the development, the construction, the project management, the ORAT that has been done was actually done by Malaysia Airports itself, which makes us unique. All that skills and opportunities are within our borders. So those are the strengths. As well as I said, that ability to look at development of the non-aero portion in working with partners in retail, like the premium outlet with Mitsui Fudosan, our joint venture with the mall within the KLIA2 airport. So those are strengths that not many airport operators can claim. They usually have another partner that does that. And I guess that makes us a bit unique.
So now, developing these airport cities, as you say, must require a lot of funding. How do you raise funds to invest in such facilities?
Well, our balance sheet has been very strong, obviously, over the last couple of years. Yeah? And the growth, as I said, last year at almost 20%, actually 18+% growth last year is testimony that the ability to actually generate revenue per se. And the mix of capital expenditure is also something that we learn over time as well. Partnering with Mitsui Fudosan, for example, so that the partner actually also carries a lot of that capex, allows us to actually build an infrastructure and an asset, together with partners who will bring not only expertise but also capital.
I see. And lastly, do you think that you will develop these types of airports elsewhere overseas?
Well, that's the intent. As we know, there is such demand for infrastructure like airports, not only for travel but also for business and trade. And so we see a lot of opportunities across the world, especially in Asia, that governments are asking for these gateways to be upgraded, and so inviting other investors, like Malaysia Airports, to come and participate. And so we'd like to, think that we bring some unique skills and strength, as we pursue those opportunities around the world.
Financial highlights. At the end of 2013, Malaysia Airports' revenue was over 4 billion ringgit or 40 billion baht, growing by 150% from 2009. Its net profit was over 370 million ringgit or 3.7 billion baht. The net profit margin was around 9% and ROE around 8%. Its PE was around 29 and PBV around 2. At the end of 2013, Malaysia Airports' share price was at 9 ringgit or 90 baht, a growth of 127%. And its market cap was over 11 billion ringgit or 110 billion baht, growing by 154% in 4 years. Guys, that was Malaysia Airports. Join us again next time for more company highlights with Me Pizza. I have to hurry now, so if you'll excuse me, I gotta pack all of these shopping before I miss my flight. See you later!